Okay, can everyone put their cameras on, please? The panelists. Okay, good day, everybody, and welcome to the Department Trade and Industry and Competition alongside the African Association of Automotive Manufacturers seminar today, talking about how to deepen automotive value chains and create demand for automotive products here in Africa. My name is Martyn Davies. I'm from Deloitte. I'm the automotive industry leader for Deloitte Africa. Thank you very much for the opportunity. We have four very distinguished speakers today, alongside also Dave Coffey, who's the Chief Executive Officer of the AAAM, who will be, beyond my moderation, will be concluding the session over the course of the next hour or so. The format is quite simple. I will introduce very briefly each of the speakers. Each of the speakers, panelists, will give 3 to 4 minutes introduction as to their company, their profile, and what are their high-level thoughts around the market for automotive in Africa, and how do we as an industry start to shape the market, to shape value chain, shape demand, and ultimately provide significant markets for automotive products and services in our part of the world. Thank you very much. To kick it off, if I may, can I introduce firstly Simphiwe Nghona, who is the group head of vehicle asset finance at Standard Bank, based in Johannesburg. Simphiwe, thank you for joining us. We also have Badr Mansouri, who is the managing director of Sub-Saharan Africa of Stellantis, a major company, as we all know, based in Casablanca in Morocco today. Badr, thank you very much for joining us. Third, we have Gabriel Almeida, who is the Chief Operating Officer, of Salvador Caetano Africa, based in Porto, Portugal. Salvador Caetano has a business footprint of 33 countries in Africa, and lastly, and not least, of course, is Thabang Mhlangu, who is an old hand working for a number of OEMs in our part of the world, but now finds himself as sector lead for automotive transport fleet logistics at the Corporate Investment Bank of Nedbank, also based in South Africa. So to begin with, if I can just ask Simphiwe. Simphiwe, you're based in Johannesburg. You've become, in recent years, incredibly proactive across the continent, looking to provide, what is often supporting demand by providing financial services and products for to consumers to purchase vehicles. Of course, between Morocco and South Africa, there's a dearth of industrialization. From your perspective as Standard Bank, probably the most Pan-African and capable bank of all, what is your perspective? How challenging is this? What are the opportunities? And how is Standard Bank supporting the growth of the automotive industry in Africa? Simphiwe?
Thank you, Martyn. Greetings to everyone that's on this session. It's great to be here, and thanks to Deloitte and AAAM for bringing us closer to everyone. So I think first and foremost, I'm not going to do a PowerPoint presentation. I've got a key, and I've got a few notes that I've made, which I thought would make it probably a little bit easier to engage on. First and foremost, Standard Bank has been in existence for about 158 years. Servicing clients and businesses throughout the continent and abroad. We're deeply rooted, you are correct in saying that, Martyn, in the continent with 20 countries on the ground in the presence of the Sub-Saharan Africa. So we, as the vehicle and asset finance business, we're represented in 14 countries across the continent, with South Africa being the 15th, which is the biggest market that I am entrusted to look after. So our Standard Bank Vehicle and Asset Finance Unit strives to be recognized as the leading asset-based finance and mobility solutions provider across Africa, which we call our home. And Standard Bank Group is accelerating towards a 2025 ambition of becoming a client-centric, digitally enabled platform business. So what this really means for us, this will fundamentally change the way we do business, including the solutions we provide, for changing customer mobility needs, across the entire continent. So we have a team of experts in the Vehicle and Asset Finance Unit. We've got a head of Vehicle and Asset Finance in each of these countries with a lot of experiences. And we're also deeply committed in the automotive sector, hence our membership in the AAAM and many other forums that, are driving for a particular strategic cause in the continent. So first, how do we create, demand, in the continent? Just the first point I just want to touch on is that mobility is needed, very much needed across the continent. And just to give some context on that, the rapid urbanization that we are experiencing will lead to increased demand for transportation across the continent. And also the rising economic levels, asset ownership and educational levels that are leading to a growing middle class of over about 300 million people are increasing the purchasing power of the continent's population, making it very possible for them to acquire cars. And this is according to the African Development Bank. And also the motorization rate, for sub-Saharan Africa is currently at levels such as 42 cars per 1,000 people, compared to the global average of about 180 per 1,000 people. So I think in there already, one could identify and appreciate the opportunities that lie for the automotive sector in the wider continent. More vehicles then are needed to transport the growing population in every aspect. Another aspect that is in favor of the automotive industry is the growing population of the region, which has a current labor force of about 500 million. And according to the International Labour Organization, this labor force will grow in excess of 600 million, or about 20% of the world's workforce by 2030. And I think that's a very important data point for us in light of what we're trying to achieve holistically, in the automotive sector. And I'm specific in saying us because I think in order to achieve our objectives, there ought to be a very tight handling approach and a collaboration between a number of stakeholders, to make this a possibility. Now, in terms of Africa's mobility customers, just for context, so the makeup of the continent's population has necessitated a segmentation of the customers as their needs and ability to purchase vehicles differ significantly. So I would like to highlight just 4 broad customer segments that really need to be considered, in the continent where this is concerned. Mass transport, such as buses and trucks, buses and taxis, logistics and distribution, entrepreneurs such as e-hailing platform drivers, the fourth one being individuals using vehicles for their own mobility. Now, most of the vehicle sales in the continent, excluding South Africa and Morocco, are business-to-business sales, suggesting that currently the majority of the mass transport and logistics segments are somehow sufficiently serviced. However, this may also indicate that there is a significant opportunity in servicing the business-to-consumer market that would purchase, for personal use. Now, the key component to this, I've just got 2 more key points to raise. We need a supportive policy environment. Now, the point around this issue is that we need all governments to play their meaningful role in making this a reality, of which without very stable and sensible policy, environments, we can never achieve, this objective. So global experience or evidence show that government industrial policies play a leading role in the success of the automotive sector. It should be the same for the sub-Saharan Africa countries where governments are playing a catalyst role to attract investment, in the different, industries. So if we just take a quick example and just consider referencing the success of the automotive industry in South Africa, which is part of the continent, if I may add, the automotive sector success is due to government support through favorable policies and relevant subsidies. Now, in South Africa, the automotive sector contributes 7.5% to the country's GDP, and South African vehicles are exported to a plus minus 140 countries. Unlike other African countries or some African countries, South Africa also has a ban on used car imports to protect the local automotive industry. And I'm making reference to this because I think we've got a very good case study of what can work, of what is possible, in the broader context of the continent. And I wish to highlight that it does not mean that South Africa is the leading, but we do have a very good example of what is possible, in our continent. Some of the challenges to Africa trade are from many scattered small economies. Hopefully the signing of the African Continental Free Trade Area will change the current predicament the continent faces. The last point I just want to touch on is probably the one that I'm very familiar with, which is access to finance or credit. Vehicle finance remains a very key part of unlocking the potential of the African market. Firstly, and probably most importantly, the interest rates for vehicle finance remains prohibitively high in many countries due to the prevailing lending rates. Now, OEMs, banks, and motor dealers need to collaborate to find mechanisms that could possibly reduce the interest rate that customers pay. For example, here, one small example is probably OEM incentives that can help subsidize the interest rates on vehicle finance. But before that happens, there has to be favorable policy, automotive policy that also, enhance and protect the industry at large. Banks tend to use specific data to determine creditworthiness and the interest rates payable on vehicle finance loans. Now, this data may not always be readily available and may result in banks not approving loans or charging high interest rates to consumers that may actually have a lower risk profile if other data is used for this purpose. So banks tend to have only access to their customers' data and not really credit bureau related, like many other parts of the world. This can make it difficult for financial services sector to service customers that bank, with other institutions. I've touched on collaboration between all players, and here I refer to OEMs, distributors, motor dealers, financiers, insurers, and value-added, resellers. And this includes warranties, service agents, and many, 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 many others. So last but not least, in summary, country needs to consider creating more regulated demand around the automotive industry. There needs to be tight collaboration between all stakeholders. That is very key. Taxes and levies form a big percentage of the costs of the asset. Improving data capability from a credit bureau perspective is really, really crucial. And also, we also need local bodies such as government, municipal departments, police departments to buy local vehicles, which will increase the demand, holistically. Those are my key opening words, Martyn. Thank you very much, for this opportunity.
Yeah, thank you. Always great to listen to you. Thank you very much for that. Can I jump to we've heard a view from South Africa. How about now a view from the top of the continent, from Badr Mansouri, from Stellantis. But I don't want to direct your opening comments too much, but Simphiwe talks about a proactive industrial policy by governments to support the growth of what is in many cases in sub-Saharan Africa, a nascent industrial sectors. What are the lessons and what are the observations from Morocco? Badr?
Thank you, Martyn. Thank you very much. Thanks to also the South African government for allowing us to exchange on this exciting topic. Maybe just before answering your question, Martyn, if you allow me just a few words about Stellantis, because while we're more than 1.5 centuries old combined, many people are still getting familiar with the name of the group. So if you allow me just a few words.
Please, Badr.
Thank you very much. So Stellantis basically is a multinational group which regroups 14 of the world's most iconic brands in the world, in the automotive industry. Our vision is to become a mobility leader powered by the diversity of our brands and our people, and to provide clean, safe, and affordable freedom of mobility solutions. Obviously, one of the, let's say, key topics today is electrification, and the electrification strategy announced by Stellantis a few months back should enable us to provide a fully electrified lineup by 2025, so very soon, and to be at the forefront of the technology globally in terms of efficiency and cost, and to secure our autonomy in terms of supply. Now, if I focus specifically on our region, Middle East and Africa, it's basically a profit pool of 80 countries for us, and thanks to a diverse and talented team with around 12,000 people employed in the region, robust commercial dynamic, a top-notch commercial setup, and a tailored industrial footprint, which you just mentioned, Martyn. Stellantis is today the third OEM, aiming to become the leading automotive group in the region. In Sub-Sahara specifically, we offer the largest network coverage in the automotive industry with close to 124 points of sales and maintenance across just Sub-Sahara Africa. And obviously, between the 14 brands we distribute in Sub-Sahara, we are just above 7% market share with a very strong ambition to basically accelerate the profit pool we capture across the continent. Now, when it comes to demand and to industrialization, I think there are a couple of points we can raise. First of all, Stellantis has one, if not the largest industrial footprint, automotive-wise, obviously, in the continent in general. And if we exclude not Africa and South Africa just for a moment, in Sub-Sahara Africa, we have industrial footprint in Nigeria. Ghana is due in a couple of weeks now, in December. And Kenya. So obviously we're a strong contributor to the continent's industrialization, and we're happy about that. We're proud, and we wish to continue, obviously. And the theme we're discussing today is totally in line with basically this ambition. And in fact, going back to the topic of today, how we create demand. Well, I would like to turn it and tweak it a bit and say basically that our aim today is to create value. And I think we've moved now from a dialectic where we oppose offer and demand, and basically now in a value-based ecosystem or business model. How do we create value, and who are our customers? I think it was just mentioned by our colleague a few minutes back. So basically, Sub-Saharan countries are basically very diverse, yeah, and it's a mistake to believe that they all represent one single uniform market, and that's how we like to see it from Europe, where I'm also originally from, at least part of me. And in fact, the majority of our new car buyers in the continent are B2B clientele. This is what has just rightly been mentioned, whose key need is basically total cost of ownership, reliability of the product, and network capillarity for maintenance. And we answer this need with cars which are adapted, heavily tested, and designed for the continent. And in fact, we have the largest R&D hub in the continent, which is called the Africa Technical Center, with thousands of engineers from Africa contributing to basically answering this first need. Second point is basically with the continent gaining momentum and a middle class emerging. This was also rightly mentioned a few minutes back. In a numerous number of countries, we also have to answer the strong needs of our B2C clientele. And our private customers have a broad range of needs, depending on the country. But again, key denominators are versatility, multi-purpose, with pickup, for instance, and through LCV segments or LCV offer we can provide, affordability or value for investment, yeah, for some. And these are mainly what we call A and B segments, so entry segments, but also the need of distinction, because it's also a mistake to believe that we only buy cheap cars in Africa. We also buy quite expensive ones, and the need of distinction for what we call C segment and above is also there. So basically, with the broad brand portfolio we have today, we are able to cover close to 80% of our customer needs in the continent. and they will change. Yeah, they will change. And we believe that in the next 4 years, we should be able to bridge the gap on the remaining 20%. So in short, it's in short for our distinctive clientele that we basically say that we create value through choice, reliability, and peace of mind, as well as proximity.
Thank you very much. Thank you. Thabang, can I come to you from Nedbank? Thabang, you've worked for and again, I don't want to direct your opening remarks too much, but let me jump right in here. You worked for 3 OEMs. You're now with Nedbank on the investment side, corporate investment banking. Two leading questions from myself. We can answer it right now or later, perhaps. Firstly we look at where do you think that Nedbank, or where will you really be investing capital in the automotive value chain? As the words which Badr uses is mobility solutions, and Simphiwe mentioned as well, mobility. We've moved from a narrow definition of auto to a much more wider one, which also encapsulates services as well. And the second sort of question I ask you is which, picking up on Badr's remark that it's increasing, the business model is increasing demand-led rather than just supply-led. And Simphiwe talking about a necessary subsidization by the state, by the government in countries to spur industrial policy. Do automotive companies appeal more to the industrialized or seek industrialization with subsidization, or do they seek to support more of a consumer, maybe at a cheaper price point, and that requires obviously less subsidization? Just some provocative thoughts. Thabang, please, over to you.
Hi there. Thanks, Martyn. Thank you for hosting today. I dropped off a little bit there, but I think I got the gist of your question. I think from a Nedbank perspective, I'll start off by saying, as previous guests have done, a Nedbank obviously being a traditional top 4 bank in our country. I think now we are a top 5 bank in terms of the continent through our alliance with EcoBank. We have access to about 36 country, and then Nedbank branded markets include your Lesotho, Namibia and Swaziland, as well as Zimbabwe and Mozambique in the southern part of the continent. We also have representative offices in Nairobi and in Accra, Ghana and Kenya. In terms of Sub-Sahara, which is my main expertise, and Martyn, as you know, I'm only recently in the banking space, having spent time in the OEM space for a good couple of years, and I think I've done collaborations with the people on this call. I think there's a lot of levers and demand drivers on the continent, and Simphiwe and Badr touched on a few of them. The story of the growing middle class, has been heavily affected in a post-COVID environment, because the system shock to the economies have led to a lot of job losses, which then result in reduced buying power, which then over time reduces the GDP per capita, which would support the B2C space in terms of demand driving, right? So I think the narrative is shifting as we speak in terms of the B2C space in Sub-Sahara markets. You alluded to, where governments are stimulating this demand, right? Either through industrialization efforts, which speak to duty benefits, which speaks to credits and incentives for localization of assembly projects, which we've seen a few of those in the market. In my view, I think in the past 5 years, my experience is that we've had a lot of hand raises from a government perspective, different markets that have been raising their hands to say that they would like to start local assembly. Of course, from a supply side, there's a lot of constraints including the lack of component suppliers in the market, the policy certainty in the markets that may defer and divert investment from the space. So while industrialization is a key enabler to demand creation because it creates skills development opportunities for economies, which also leads to a general upliftment in disposable income in the space, the regulatory frameworks have to be consistent. They have to be properly enacted and properly implemented. I think, Martyn, we worked in the Nigeria market a couple of years ago, and it was less than smooth, right? And I think the consensus is that. In terms of other drivers, I think that I see, Martyn, as well, is creating governments need to reduce the amount of red tape, right? So there's the ease of doing business indices that are used, and they show that in certain markets, it's really quite restrictive. In my experience, having led go-to-market strategies in different markets in the sub-Sahara space, both in West Africa, Southern Africa, and East Africa, you do find certain markets that are prohibitive in terms of their attractiveness for investment. So that's another point I'd like to raise. And for me, another point which Simphiwe alluded to speaks to financial institutions and how we can create access to financing, both from wholesale financing and other solutions. But I think we've done quite poorly in terms of retail financing on the continent, where you do find a lot of banks not having either the appetite or the systems to rate from a creditworthiness perspective to the clients. So I find that there are a couple of factors that sort of inhibit growth or that stop growth from reaching its full potential in the market. However, having been in the space for over 10 years now, I do find that the opportunities are there and more collaboration is required. And of course, ensuring that we put our heads together with government, with the large distributors, with us as financial institutions, and finding the unlock, as we call it, for some of these opportunities that we see in the market. So as an opener, I'll leave it there, and we'll continue the conversation.
Thabang, brilliant. Thank you very much. Gabriel, can I come to you? Gabriel, you're based in Porto, in Portugal. You run a company, Salvador Caetano Africa. You're in 33 odd countries. That's a very wide footprint. You've been in Africa for, I think it was 1946. I think I read that's how long you've been in this part of the world. Gabriel, just your observations. So obviously, firstly, your profile of your business, your observations, but also picking up on what Thabang said. And the question I have is, what's the future of automotive in Africa? Is it sort of more protective pro-industrial policies, or in line with free trade agendas, more open trade for the auto industry? Gabriel, your views, please. Thank you.
Hello, good morning to everyone. First of all, thank you very much for inviting me for this panel. Probably, if you allow me, I will start a little bit with the Caetano Group, because I imagine that most of our listeners probably don't know so well. So we are not in Africa since 1946. We are in Africa since 1990. The group was born in 1946. So we have a 75 years history. The group started with the bus bodybuilding industry, which is still a very important activity in the group. So we still build buses that we sell in different parts of the world. And then in 1969, we started in the automotive industry with import and distribution of Toyota at the time in Portugal, which is an activity that we started to grow over the years. So automotive distribution in the group is well, I would say one of the core activities in our company. And for your reference, last year we sold more than 80,000 units between new and used. And yes, we have going to Africa and moving to Africa. We made, let's say, our first investment in the continent in 1990, when the group decided to invest in Angola. It was our first market in the continent, and since then we have been investing and growing our activities, which led us to the position, like you all said, to be present in 33 markets today. So this is more or less our presence in the continent. From these 33 markets, we are directly present in 6 with direct investments, with our own people, with our own facilities. In the remaining countries, we work with through partners that we support, and we try to support development on an operational point of view. So coming to the question and to the subject of this, on how to create demand in Africa. Let me probably start to say, or divide the profile of customers that we have in big 3. So the B2G, so governments, B2B, corporate companies, and B2C private customers. And today in Sub-Saharan Africa, where we have most of our experience, where we operate mainly, B2B and B2G represents the biggest percentage of sales. And this means that normal sales to private customers is something that is not so consistent and so frequent. And this has to do with something that was already mentioned in this event. This has to do with the fact that a middle class in Africa is almost inexistent, and I'm speaking mainly about Sub-Saharan Africa. This was something that was already mentioned. We have it was mentioned by Simphiwe, the fact that the number of new cars per 1,000 inhabitants is substantially lower in Sub-Saharan Africa or in Africa than we have, for example, in Europe or other regions of the world. This is a fact. And if we look to these numbers, and if we look to the sales of new vehicles in Africa, we see that probably 80% or even more of the new vehicle sales are made in 4 or 5 countries. We are speaking about South Africa, we are speaking about Morocco, Algeria, Egypt, eventually something in Tunisia, where in fact we see that most of the vehicle sales are made here in these countries. So in Sub-Saharan Africa, the vehicle sales new vehicle sales are quite low. And this has to do, in our opinion, with the fact that a middle class is almost inexistent. And in order to be able to bring or to create vehicle demand, of course, this middle class will be needed. For that, of course, incentives on investment, internal and foreign investment, to generate jobs, to generate richness is, of course, and absolutely mandatory, but we all know that this takes time. So this will take a lot of time to be solved. So what we need, what can we do in order to try to increase this demand in Africa? Well, in our opinion, there are some things that can support the activity. Eventually, some of them difficult to implement, but in the end, in our opinion, quite needed. And I would start probably for used car market. Today, the used car market, and this I think is quite basic. I think all of us probably have this opinion, but used car market in Africa is extremely big. I would say probably a little bit without basic rules to manage the activity, and somehow this also jeopardizing the quality of the units in operation that we have in Sub-Saharan Africa, and affecting, of course, the demand for new vehicles. Don't misunderstand me, I have nothing against used car market. I think it is also part of the business. We also do it in the group, but we need rules. And the used cars that we have today in Africa, or in many markets in Africa, I must say, Sub-Saharan Africa, are with low quality in terms of safety, which is not good in terms of controlling car accident. It's not good in terms of CO2 emissions, which again is not good on an environmental point of view. And it's even not good to promote the investment of KD projects that some governments are willing to do. So this is something that, in our opinion, governments probably should focus a bit, because I think it can have an impact on the activity. Then also a little bit to do with this is the fact that if we don't establish a control on the quality of the vehicles that we have in operation in our streets, again we are not promoting the safety of the drivers and putting in risk the safety of the people. What I want to say with this is that eventually a good measure to control a little bit the car park quality would go through what we call MOT or periodic inspections of the quality of the vehicles. From the markets where we are present, we saw some movements from some governments trying to implement these measures in order to bring some quality to the park, but in the end without good results or satisfying results until the moment. But again, this is one of the measures that we estimate that could have a good impact on the quality of the park on one hand, on vehicle demand on the other hand. Badr spoke also about something that we truly believe is quite important. It is the fact that one of the reasons why people look for used cars is because many customers simply cannot afford a new vehicle. So the fact that or the possibility of some manufacturers to bring on board A and B segment vehicles, so entry vehicles, the smallest cars, A and B segment vehicles to the product range availability. This is again something that I think would help vehicle demand. So we miss, as importers and distributors, we miss many times the possibility to offer to our customers affordable vehicles with quality, of course, in terms of safety, in terms of environment, that would allow our customers to buy a new car, 0-kilometer car, with quality instead of those used vehicles that I spoke just before. So again, this A, B, and B segment availability, affordable vehicles, low cost new vehicles, would, in our opinion, promote and bring potential buyers to us. Then probably a final comment, just as in my introduction, has to do again with something that was already mentioned here, which is retail finance and eventually even renting solutions. Well, basically, accept that it will always be difficult to implement a more flexible and quicker retail finance system. Accepting this, on the other hand, it's absolutely mandatory that we have these solutions to boost vehicle sales. Today, financing in many markets is extremely expensive, that, like it was mentioned just before. It's many times slow, many times with low levels of approval. So the implementation of operational of more flexible financing systems will be, in our opinion, absolutely important to increase vehicle demand. Not sure if I was capable to be clear in my thoughts, but I leave it to you.
Gabriel, thank you. Just staying with you for a second, you mentioned you sold 80,000 units, predominantly yes. B2B and B2G, business to government.
Yeah, I know, but let me, I was not clear. I said, or what I wanted to say is that the group, Salvador Caetano Group, because it operates in Europe, in Africa, and so on, we sold more than 80,000 units between new and used in all our geographies. In Africa, quite lower, unfortunately.
What is the number in Africa? of that
We
80,000?
are around 4,000 to 5,000 units these days with COVID scenario.
And which countries would you find, if I may ask, you have a wide footprint, which countries would you find the most appealing from a market perspective of where you're seeing growth in terms of your sales?
In terms of investment, and I will not focus on South Africa or North Africa because it's a completely different context in terms of automotive business. But looking to Sub-Saharan Africa, the markets where we see more potential are, of course, Nigeria for the dimension that the country has, and we are not directly there. We don't have any presence in Nigeria. We also see a lot of potential in Ghana, in Ivory Coast, Kenya for sure. Angola these days, it's a very, very difficult market, but used to be quite important for the group in the past. Our activity that it was not even by far the biggest operation in the past was worth more than 3,500 units per year, which was for Sub-Saharan Africa quite substantial. Mozambique is still very small, but we still believe that the potential of the market is quite big, so it will come for sure one day or another. There is also a market that not because of the dimension of the automotive business, because it is quite small, at least the official one, but because of the dimension of the country, we also believe it is important, which is Ethiopia. And Senegal. I was missing Senegal. Senegal, we are directly present also in Senegal. We have a very important operation there. It's a stable market. We don't estimate big growths from one day to the other, but it's well, quite promising.
Thank you.
I think I'm not missing anyone.
Thanks, Gabriel. Thabang, just coming back to yourself briefly, as mentioned, drawing on your previous experience, particularly with OEMs and driving strategy in the region from South Africa, how is South Africa serving as a, in the same way Morocco is, we'll get to Badr shortly, as a regional sort of manufacturing platform for exports? What is your view around South Africa serving as that platform to support industrialization, either in country, but also servicing from an export perspective, the auto markets, particularly those that are growing in our own region? Thabang?
I think you do find that South Africa is largely the base in terms of Sub-Sahara as a springboard from a manufacturing perspective, for one, because the largest manufacturers and re-exporters of vehicles are based out of South Africa for Sub-Sahara. So that's your Toyota, your Nissan, your Isuzu, and a few other players that are there. I mentioned those three specifically because I've worked for them. And you do find that the brands in South Africa are quite proactive in terms of trying to access the opportunity in Sub-Sahara. We spend a lot of time creating strategy documents and executing on strategy around go-to-market, right? For different markets. Some brands have specialized teams, which I find is very, very effective. So having a Sub-Sahara division or a business unit within the OEM space is quite effective. And then, of course, looking for partnerships that work. So I know the guys at Salvador Caetano quite well. In both my previous brands, they are quite active on the continent and how they want to invest in different markets. So you find that some of it is OEM driven, and then you have some groups that have ambitions in Sub-Sahara that will contact OEMs for opportunities in the space. And then, we organize entry into that. That's primarily on the retail side. That's primarily on the retail side. On the manufacturing side, of course, you have found certain investors putting putting up a plant. Nigeria was the big one. Ghana is the one that's getting a lot of momentum at the moment. And as you may know, Martyn, we have a few early hand raises for potential in Ethiopia that's coming up. Kenya's always had a reassembly and that sort of thing. So that's a market that's fairly established in that space, and they've got good expertise. The question I often ask myself, and I used to ask myself quite a lot as a strategy guy and running a BU, it's all around how the population advantage and the youth dividend that we often speak about, does it really create real opportunities in market? Because as I mentioned earlier, disposable incomes are what counts, right? Access to retail financing, as Gabriel says, are what counts in terms of really exponentially driving that demand from that side of things. In the B2G space as well, you find that there are structures in place that one has to navigate around in order to get things done, as it were, and that does become an inhibitor for a number of risks that arise from engaging in that sort of thing. So I think for me, the South African-based manufacturers and OEMs, have a lot of them have been quite proactive in trying to access the demand. Part of the job that we have to do when I was on the other side is around, and this is a big factor, educating our colleagues around the environment in Sub-Sahara, right? Because human nature, people a lot of the time have less appetite for that which they do not know. So walking that journey in terms of creating the intellectual capital base of the understanding of the market, because if I don't have the support and the understanding of a marketing department, of a supply chain department, of a finance department, because of the various instruments of trading on the continent, there's a low chance of success. So that job becomes critical for those of us, you know, that have been there, how to bring our colleagues on board in the broader corporate environment so that we can continue to increase our intellectual capital base around market knowledge, and of course to support growth and development of the sector in the market.
Well, thank you. Badr, coming to yourself from Stellantis. Earlier you mentioned that by, was it 2025, you have an electrification strategy across your product range. At the same time, Gabriel, you were talking about often the unregulated nature of the used car market. One of the key things you mentioned, Gabriel, was the issue of CO2 emissions, environmental concerns. We've just come out of COP26. So Africa is a substantial consumer purchaser of used cars, often, Gabriel, as you mentioned, with
I think we've lost Martyn.
Yes, I think so too.
So maybe we just wait for a few seconds.
Absolutely.
Apologies, I'm back. But did you get that question, or should I repeat it?
If you don't mind repeating, Martyn, because I think it just got in the middle. If it's okay with you.
Apologies. I'll be succinct, but just you mentioned earlier that Stellantis has electrification strategy. It's come 2025 across all your product range effectively. At the same time, Gabriel was talking about the unregulated nature of used car markets, CO2 emissions, for example. We've just come out of COP26, and of course, there's very ambitious targets at an industry level, at a government level, sovereign, around limiting CO2 emissions. And having the vast, particularly B2C market, is cheap, often dumped, arguably high emissions, CO2 emissions vehicles across our region. How do you balance your company's strategy, but the reality of second-hand vehicles in the continent, in the absence of regulation thereof? How do we balance this, and what does the future hold when there's an environmental imperative, but at the same time there's a lack of state regulation around this? What's the view from Stellantis?
Thank you, Martin. It's a very good question. Well, what is interesting? I speak here as a manufacturer and as an African citizen. Yeah, so with both hats. What is extremely frustrating for us as citizens across Africa is indeed sometimes as you mentioned, I would not say the lack of regulation, but let's say the delay we may face as opposed to other countries across the world. Yeah, CO2 emissions being one, so which basically is a way to protect our health, yeah, and the health of our customers, yeah, depending on the hat we take. Global warming, yeah, and all these are key topics. But while being frustrated on this front, I'm also very optimistic and very positive, because what we have shown as Africans in the past is our ability to be agile, is our ability to adapt extremely quickly. You take some of the African countries, we do have mobile phone penetration, which is higher than some of the European countries. But we went from nothing to having 1.5, 1.2 mobile phone per person in certain countries. So we have this ability in Africa to jump and not to follow patterns of let's say so-called development. Yeah. So that's why I'm very optimistic in our ability in Africa, and especially in the countries which have the capacity and the resources to generate electricity in let's say non-fossil oil or non-fossil base. Yeah, Gabriel mentioned Ethiopia with very strong hydropower base. I am very confident that we will be able, as opposed to Europe, which went through Euro 4, Euro 5, 6A, B, C, D diesel norms, for instance, to go from poor quality of fuel to likely electricity powered vehicles and and not only cars, not for buses were mentioned by Gabriel. Motorcycles are already there. Yeah, Gabriel mentioned Ivory Coast, Senegal, Ghana. We see those motorcycles which are electrically powered, and that's why we're very optimistic, and that's why we really believe that our continent will embrace this jump at different paces, obviously, but it will be there, and it will not follow let's say the same milestones and the same patterns as in Europe or North America or elsewhere, but it will go by jumps. That's the way we've always done it, and we're pretty confident. As a manufacturer, Martin, we're ready. We are ready, fully ready to support. Yeah, we just need the right level of infrastructure, and Gabriel mentioned it, of probably subsidies to make it not necessarily giving money. Yeah, it may be with a different level of taxation to encourage such products, such mobility solutions to be introduced to the broadest base possible.
But just staying with you, I mean, what observations are there? Are you seeing certain countries or regions or perhaps cities become a little bit more agile around policy enablement for companies like your own, others, traditional OEMs, new mobility providers? Which countries, I mean, I saw, for example, Rwanda in recent times has been very proactive around creating new business models alongside VW. Thabang Simphiwe earlier mentioned Ghana, creating a new nascent industrial hub in collaboration with the likes of VW, Toyota, Nissan are there. So whatever sort of, should we say, whatever nascent hubs of innovation or policy agility that you speak to, are you seeing across Africa currently?
That's a question for me, Martyn, right?
Yes.
Okay. Well, I think I was going to say, indeed, there are some countries are very, very proactive and forward thinking when it comes to electrification, and not only, or to future means of mobility. Rwanda is definitely a very interesting laboratory for the continent at all levels, and I think it's very admirable what the country is trying to achieve there. Kenya is an interesting example because taxation is changing over there and is becoming more favorable to plug-in hybrid solutions, full electric solutions for sure. Also in Kenya we see an interesting movement. In West Africa also you have on Senegal, Ivory Coast, I think it's Senegal, which is offering public transportation, which is electrically powered. So for sure, or increasingly electric powered. So for sure, there is this movement. We can see it, but not only from. I mean, it's not only a government topic. We also see numerous ecosystems, private ecosystems, which are pushing the governments to open up. You have I think very recently, not naming them, but an African startup has raised significant money to further develop, and it was all over the news. And this company is doing EV conversion on used car, which was mentioned by Gabriel, which is probably what we sell most in Africa. So you see, this is what is so fascinating about us. So we're at the same time we can somehow look like we are not moving as fast as we can, but on the other hand, we come up with a solution which brings electrification and used car together, and these ecosystems are able to leverage massive amounts of money because everybody sees the potential. So again, I am not worried, but again, obviously, any support coming from the regulators, from the governments, in accelerating the process through law enforcing, through taxation, obviously would help consumers access those mobility solutions.
Thank you, Badr. Simphiwe, coming to yourself here, Badr talks about sort of almost a collaboration here. We're talking sort of state, we're talking companies, particularly the larger OEMs who can shape markets. That's the role of the AAAM, to effectively shape markets in target industries, using Thabang's phrase, countries that have raised their hands to build a coalition of a willing, if you will. But Simphiwe, your observations around, a lot of this potential, we hear about business to business, business to government, of course, but the real untapped potential, of course, is business to consumer, talking about the vast numbers of population, albeit with limited purchasing power. Which comes first here? Is it the income or is it finance? But what is your observation? What is you need to be agile to provide this. We come from a very regulated, long-term regulated market in South Africa that has worked clearly, as you mentioned earlier, in creating a very established automotive industry at every level. Where will your 54 countries, as Badr mentioned, will not rise at equal rates, of course, but there's some very interesting examples coming to the fore. Which countries, regions, or sectors is the opportunity really emerging in B2C? And if it is, where are you starting to see it? Simphiwe?
Sure, thanks very much, Martin. And I think earlier on, the point was made by my colleague Thabang in terms of how financial services, banks in particular, have fallen short, around the retail offering, to consumers. But I think having, some footprint, in most or some of the countries in the continent, we are able at least to understand the different dynamics, and also additional to that, some in-country nuances that may exist, because they'll all differ. Legislation, regulations, they all differ in different places, and so therefore the levels of credit appetite for banks as well, will probably go alongside some of the laid down regulation, and legislation. Now, some of the shortcomings, that were highlighted before, are probably aligned closely to also asset classes. Now, when you get, and I'm really just talking on the retail finance side of assets, where you are unable to evaluate the worth of the asset, or have some level of prediction in terms of the, what would look at in asset-based lending loss given default, it makes it pretty difficult, to have any form of prediction in terms of what is it that you are financing. Remembering that all these assets you place on your balance sheet, and you have to carry it over a certain, duration of time. Now, when we link this up with where we would like to be, as an automotive sector broadly, once you start to manufacture vehicles locally, and you have a great sense of the, values and worth, you've got a much better chance of understanding the longevity of the value of the asset over a period of time, and therefore creating, even other life cycles within the same asset. Of course, there's issues around infrastructure or lack thereof, depending where you are. And I mean, that has a great impact, in terms of the asset that you finance. But I guess, very simply put, Martin, it's very crucial for any lender of any sort, at least to have a level of understanding of the asset that they're bringing in onto their, onto their balance sheet. I think it's a very important, point. Now, one may argue that some of the cars imported from elsewhere around the world, people still buy them. They do so, but with that said, they find other forms of funding relative, to the, to their reach, either through, certain loans that they do. But remembering that the risk of it becomes a little different for the bank, where you actually do a term loan, or it's an overdraft, or it's anything else, because then it's entirely, up to the customers. And one, the point around used cars was raised, which is a very good point. But once again, having an ability to manufacture locally, having good control of the price, and also limiting, the import of used cars does give us a better chance, of supporting these programs, through the financial offers.
So last question, perhaps from my side, before we'll start to bring the conversation to an end. But are you then Standard Bank, or Stanbic, as you know, in many countries to the north of South Africa? You have so many corporate clients. Is then, rather than going mass market to B2C, is the market, and I guess perhaps you're doing it, is the market not then reaching out to your corporate clients and offering vehicle asset finance to their employees, where you predictable employment, or predictable income rather, through structural employment in those companies, and perhaps more of an ability to regulate and really price the asset, if it is ideally a new vehicle rather than a pre-owned one, where the variables are far greater. Your thoughts?
Yeah, look, Martin, I think, there's many ways to skin a cat. I mean, all these possibilities are there. So I think depending on where we are in the continent, whether we're part of Stanbic or we Standard Bank, we've got a number of value offerings, and I think Thabang was quite right in pointing out that there's also wholesale finance opportunities. Now, if you look at the broad spectrum of the OEMs that are largely in South Africa, we also have an intended objective to ensure that we also support those that push cars into the continent in whatever shape or form. Now, if we zone in back to your questions, so whilst carrying those clients in the wholesale space or the corporate investment space, there remains a lot of opportunities to engage with a number of them, seeing that they are also positioned in most or some parts of the continent. But I think the key thing, once again, we need to go back to the point around working together, collaborating together, but also I think the levels of appetite on some of these big corporates on their ability to want to form part of the solution will be a key driver. But I think as a bank, in different parts of the continent as well, we're very open, if I may call it that, to the opportunities that exist in engaging, with these large corporates.
Simphiwe, thank you. Gentlemen, to conclude, normally I would give me your highlights of the conversation, but rather than that, I'm going to ask you a more tricky question. Short to medium term, I want you to conclude in 30 seconds or so each by telling me what are the priorities of your particular business in Africa over the course of the next year to 3 years. Let's call it short to medium term. Badr, can I put you on the spot and start with you perhaps? What are your priorities going forward as Stellantis?
Thank you, Martyn. Look, for Stellantis, our ambition is to basically grow our footprint again. Yeah, and you mentioned industrialization. We were the first manufacturer in Africa. We started a major industrial project in 1972 in Nigeria, which is still alive, today. So we've been in Africa since a very long period of time, since more than half a century. And our objective is to basically come back. And how to come back is to come back in a different way this time. We mentioned it with product which is adapted, even more adapted to the continent, to the clientele, leveraging clean, new technologies. And expanding through more territories to be covered. Yeah, there are still many countries where we are not present. Yeah, and we would like to go and meet our customers over there and support their needs. And expansion through industrial footprint. Yeah, it doesn't mean we can't have one factory in every country. That's just not possible. But wherever potential allows, yeah, and there are matrices, complex matrices to define this, we will be present and support. I think that's let's say our economic let's say ambition, but we also have a human ambition, and the human ambition is to continue encouraging diversity, continue encouraging knowledge and R&D to be promoted, because we believe that this is the only way forward, is to give the continent the keys to be let's say captain of its own ship. And with African Technical Center, we've mentioned it earlier in the discussion, with very talented engineers being trained as we speak. I think this is one way to retribute back what the continent has greatly gave us all the past years, and for what is yet to come.
Badr Mansouri from Stellantis, thank you very much. Thabang,
thank you.
Corporate Investment Bank, Nedbank, what are your priorities in the short to medium term, Thabang? Please reveal all.
I don't think it's safe to reveal all with Simphiwe being on the line. But what I can say though is that, of course, from a bank perspective, Nedbank has gone into the alliance with EcoBank, which I'm sure over time the relationship will evolve and grow, and it gives us access to market from that perspective. I think you mentioned something interesting around targeting the B2B space and looking for opportunities for growth there. This involves from a wholesale, from a trade finance perspective, different types of solutions that we can offer to them will be quite important. I think additionally as well, which I've found in my now 10 years working on the continent, is that we have to be more deliberate about bringing our colleagues online, right? It's such a big point of why we don't have more mental investment into the space and everyone seeing the opportunities. So those of us that have been in the space need to work harder in bringing them on board in terms of the opportunity that this continent has to offer, and then originating creative solutions in order to take advantage of those opportunities and support growth in this sector. That's what I would say. Thanks a lot, Martyn.
Thanks, Thabang. The e-commerce angle is very interesting as well. Thabang Mhlangu, who's from CIB at Nedbank. Thank you very much, Thabang. Gabriel, to yourself, is that this is you're now in the 4th decade of your business in Africa. What does the future hold? Gabriel, your strategies going forward?
Yes. If you allow me very quickly, just before that, I would like just to go to the topic of the EVs that you discussed with Badr. Meanwhile, my connection was gone, so I didn't listen everything, but I will be very quickly. I think it's absolutely essential that on a strategical point of view, we start thinking seriously about EVs in Africa, in sub-Saharan Africa. Because the future, and it's not so far away from now, and all this has to do with vehicle demand, we will not have cars to sell in sub-Saharan Africa. That's for sure, in my opinion. We have a serious problem of fuel quality in sub-Saharan Africa, which means that new generations of engines, most of them are not compatible with the fuel quality of Africa. And so EVs can be definitely the solution if we are capable to create, of course, the necessary environment, 360 environment to support this activity. Even if we change or improve the fuel quality in sub-Saharan Africa, which is something that takes time, probably it will not happen from one day to the other, the fact is that manufacturers are not investing anymore, at least as they used to do it in the past, in combustion engines. So sooner or later, and we start feeling this already today, sooner or later, our model range will be quite small and it will be impossible to sustain investments without products to sell. So electrification is something that we need to take seriously in the short term, in my opinion, very seriously. So sorry to say this, but I wanted to share my opinion on this one. In terms of our strategy, our focus in the next 3 to 5 years, definitely we want to increase our footprint. We want to do it with the right partners in the right markets we want to increase our volumes in Africa, and this is of course a very economic perspective of our strategy for the short term. But we also want to do this with quality, and it was spoken here about mobility solutions, which is something that our group invest heavily, mainly in our European operations, and that we want to bring to Africa. If we are not capable to, for some reason, if our customers are not capable to buy a car, we want to be able to offer them mobility solutions. So the good examples that we are being able to implement in our European operations, we are trying to step by step bring these operations also to our Africa operations. And this is something that we are doing today and that we want to increment much more in the near future. So mobility also something to be implemented more heavily in the coming years. Then KD projects, we are very open to do this. It's in the DNA of our group with the bus industry that I mentioned in the beginning, also with automotive KD projects that we do also already today. So we also are looking for the right opportunities to invest in KD operations in Africa in order to, again, if possible, because it only makes sense if that happens, to bring more affordable vehicles to our customers in the continent, and to create, of course, and to support economies, creating jobs and creating well, the good conditions for development of the economy. All this having always in mind, because it's also in it's what we call the big Caetano, with let's say corporate social responsibility values around all the activities that we try to implement. Thank you.
Gabriel from Salvador Caetano, Africa, and from Porto today. Thank you very much for joining us.
Thank you very much.
Thanks, Gabriel. Simphiwe, your strategies, your views going forward, what are your focus areas? Before I hand over to Dave Coffey, the CEO of AAAM, to conclude this conversation. Simphiwe?
Thanks very much, Martin. I think first and foremost, if I speak on, under the Standard Bank Group umbrella, we say Africa is our home, and we proudly drive her growth. And I think it's a very important commitment, that is being made, by Standard Bank, holistically. So I guess we want to be part of the growth journey within our own home continent, that is Africa. We also want to provide or help craft or come up with solutions around, the social and also the environmental issues that we're dealing with in all the different parts of the continent. And also perhaps on the vehicle and asset finance business, we're very clear on striving to be, the leading mobility and asset-based lending, business, in the continent over time. There's a couple of ways of how we think we can achieve that. And, and clearly, being part of the AAAM for the past, 2 to 3 years is also one way, of us, getting closer to some of the opportunities that exist, within the continent. And yes, Martin, I think lastly, we also believe we have solutions also for home South Africa-based OEMs to help overcome some of the challenges that we have in the continent. As a small example, we already have a capability around wholesale finance, which is the floor plan abilities, that can not only help dealers, but also the OEMs in pushing cars into the various parts, of where we are represented. With that, I'll close it there, Martin, and thanks once again for the opportunity.
Simphiwe, thank you. Always great to listen to you. Simphiwe from Head of Vehicle Asset Finance at Standard Bank, Africa. Gentlemen, on behalf of myself, Martyn Davies, Automotive Industry at Deloitte, it's been a pleasure hosting you. Thank you very much for your time. I thoroughly enjoyed the conversation. Handing over to Dave Coffey, the Chief Executive Officer of the African Association of Automotive Manufacturers, to conclude. Dave, over to you. Thank you very much.
Thank you, Martin, and thank you to the team. We've overshot our time well, but it's been extremely interesting, and I've hung on to the full conversation, and I'm sure everyone else out there has done that too. So just to reflect on what I pulled out of this conversation, I just want to make one note, Martin. You've heard this before, that the success of an automotive industrialization path with significant growth does not happen by chance. It requires deliberate and courageous leadership. And this conversation reflected that. We need to do things in a collaborative manner. And those were the words of Minister Martyn, Minister of Trade and Industry in Ghana at our Auto Forum in September last year. And this journey really does start with the policy, the industrial policy. The industrial policy has an ecosystem of which obviously affordability is part of that, but requires the development of the value chains, the infrastructure, etc., the legislation dealing with some of these challenges. So it's a critical start this journey which is required. It in turn creates jobs, which brings people into the middle class, which is so vital. But just to pick out, we do need to make finance more affordable and more accessible. And there are challenges there of the prevailing lending rates, which were mentioned, the difficulty to access credit. There were comments around credit bureaus and actually collaborating to have information more readily available, more transparent, so it's not such a difficult process. And I've heard this out on the ground too. We need to collaborate between the OEMs, the dealers, the financing houses, the government, the variety of stakeholders. We need to find solutions to this challenge. And yes, the business to consumer obviously was seriously affected by COVID. We understand that. But what almost the highlight for me today was the discussion around the different segments of the market and accessing each of these different segments and the importance of doing that. There is a place for used cars, and it is key. You can see it in markets. Just take South Africa. For every new car sold, two used cars are sold. What are the mobility solutions for certain segment requirements? But having to understand that and covering that is key, in my view, to unlocking. The issue with used cars, certainly, we cannot remain the dumping ground of the world. We need regulations to actually come into play. There's an interesting, we would have seen a year ago, United Nations Environmental Program highlighted the used cars, unsafe used cars coming from developed economies of the world, and that was specifically around Europe. So there's a working group going on now, and I know that it started of what is the role of the developed economies in making sure that used cars leaving their shores comply with minimum standards, and that is key to assisting Africa on this this journey. But we are a continent of innovation. We are a continent of absolute resilience, and I'm extremely optimistic about the future. The time is now. You just look at what's happening. You have the free trade area. You have the Free Trade Area Secretariat, which is a central body for the first time that's coordinating and driving industrialization, of which automotive is one on the continent. There's great interest. We as AAAM have sat in Council of Ministers meetings. There are countries that want to participate in this value chain. Not every country can assemble vehicles, so that's understood. But how do you integrate Africa, to grow this industry in Africa? So the last issue is I found the powertrain discussion most interesting. What is that drivetrain journey that's going to take place over in Africa? And there certainly will be pockets which will move to electrification quicker than others, but we're on this journey and it's not going to stop now. So if I can just thank the participants, I want to thank Thabang, Gabriel, Simphiwe, Badr, and Martyn for hosting so effectively. I thoroughly enjoyed it. I think it's extremely meaningful. We've overshot a long way by sheer interest. So I thank you, and I think that the audience who's participating here today, I know we started about 10 minutes late, but it's one of these technical glitches, and I hope you found the interaction most valuable. So on behalf of AAAM, I wish you a wonderful afternoon, and thanks for the contribution of the team on the panel and Martyn. Have a good day. Thank you.